What is going on, YouTube? Welcome back to a new video. And in today's video, we are going to be talking about another model that I have here. It is called the Phoenix model. And in this model, all it requires is a rejection block and an SMT divergence at the rejection block. Very, very simple. You guys know me. I like simplicity. I like simplifying things as best as I can for you guys. So that way you guys can take these models or any, trading idea or concept that I'm teaching in my own way. You guys can take that knowledge and apply it to the live market as simply as can be, because I already know trading is already hard enough. It's already overcomplicated enough. But yeah, I'm going to give you guys here the Phoenix model. What I like about this model is that it has a very low risk and a very high reward if you can catch it. Ideally, you want to set limits with this model, and you can market enter, but with limits, it's really, really good as well. But all it requires is a rejection block and an SMT divergence at the rejection block. Now, some of you guys have probably heard of rejection blocks. Some of you guys have probably not heard of rejection blocks. Simply put, a rejection block is a very long wick. So for a bullish rejection block, it's a very long bottom wick on a bullish candle. And for a bearish rejection block, it's the very long wick on the top of a bearish candle. So the Phoenix model, all it requires is one, a rejection block, two, an SMT divergence at the rejection block low with the correlated asset. So you must trade instruments that have correlated assets to them, such as, for example, NQ to ES, Euro USD to GBP USD, etc. The entry is going to be ideally at the 50% of these rejection block wicks. So if you guys have studied ICT's content, you guys may have seen him, may or may not have seen him use the 0.5 of certain wicks, and these are called rejection blocks. And now they are a very sensitive area, right? These rejection blocks, the 0.5 should have a reaction. And what I've found from back testing and live testing this model here is that when there's SMT present, if the SMT is valid, this rejection block should hold, right? So let's say that this is an ES chart here, and we have NQ sweeping the low, the same low right here, right? And we have ES making a higher low. So in theory, SMT divergence, this is showing that ES is the stronger pair. So if the SMT divergence is actually correct, then this rejection block should hold, and this low right here should be a protected low. So you can just imagine if you set a limit here at the 0.5, your stop loss is going to be very, very tiny, right? So you're getting that confirmation. You're getting the confirmation of an SMT divergence, and you have another PD array, such as the rejection block, potentially holding, so that way it can go in your way. So that way that SMT divergence can actually, play out in your favor. Now the TP for this, you obviously know where your stop loss is going to be. It's going to be at the SMT high or low. And the TPs is actually a little bit of a variable. It's very subjective. You can aim for a fixed RR, like a 1R, a 2R, a 3R, a 4R, a 5R, etc. Or you can aim for any lower time frame buy side or sell side, internal sell side, internal buy side, whatever it is you guys want to aim for. You can aim for a fixed RR. It's probably the best thing to do with this, because if you can snipe the 0.5 of a rejection block and you have SMT divergence to confirm it, you can make a lot of money. And this model is specifically really good for those intraday trailing prop firms, because you're literally risking pennies on a dollar to make a lot of money. So let's go ahead and jump onto the chart so I can actually show you how this model functions and what you should be looking for during live price action. So jumping onto the charts here, I'm actually going to show you guys a trade that I took on my Apex funded accounts and Tradeful funded accounts. It was actually a trade that I took on my own because I have been live testing this model by myself. I haven't sent out signals or anything like that. I'm just being very transparent with you guys. But this model does work. It's been working very, very well. Like I said, it works very, very well with prop firms that have intraday trailings like Apex or Tradefy's, one of the Tradefy accounts, or even Take Profit Trader. So right here, we had ES come down. We ended up sweeping this low here. So if I hover my mouse over this low, it's that low on NQ. So I recognize that ES is obviously the weaker one here. So then I mark out this rejection block here, this very long wick. All I'm doing is marking out the wick, because this wick right here can be used as a PD array. The 0.5 is a sensitive area, especially if you have SMT divergence. So if you have SMT divergence with the correlated asset, in this case, NQ is making the higher low, it's tapping the 0.5 of this rejection block, of this, you can call it a wick block, right? But ICT likes to call it rejection block. So it's tapping the 0.5 of this, it's sweeping this low over here. So this low, in theory, should be protected because of the SMT and because of the rejection block. The midpoint is a sensitive area of this rejection block, so we should get some sort of reaction. So I didn't necessarily set the limits right there, but I did notice the reaction after ES swept out that low and after we tapped the 0.5 of this 15-minute rejection block. So we ended up pushing higher here, and I ended up market entering and then just aiming for this buy side all the way up here, which coincidentally enough, it was a 15-minute fair value gap. So my entry was right here. My market enter price was about at 657. I'd put my stop below this low because I didn't want to see it come back and retest the 0.5. And this was about a 3.22 RR trade. So it was about over a 3R trade. So this was a very, very clean trade. But you also had another trade right after this, funny enough. So if you go to your 15-minute time frame here, it's a very good scout model as well. But if you go to your 15-minute time frame here, you can see here we ended up sweeping this high here. This high is that high on ES, so we ended up getting an SMT divergence right there, SMT divergence right there. So if you mark out the 0.5, and if you guys are wondering what the purple box is on the ES chart, that is the new week opening gap. So another, extra confluence to tap the bottom of the new week opening gap. But anyways, the main thing that I want to bring your attention to here is this rejection block in the 0.5. It tapped it here, tapped it there, and if we go to the 1 minute, you can see here if you had set limits or market entered anywhere up here, your stop is about a 4-point stop, and you can aim for this, which is about a 3.5 R. Like I said, this model is very, very, very good for those prop firms that have those intraday trailing stops. So if you are a person that struggles with intraday trailing stops like I usually do, because my main system really goes for those 2 to 3 Rs, but using the flow state model and things like that. But with this specific model can really, really help you pass those Apex evals and actually get you payouts. So if you guys are going to be using this with Apex or Take Profit Trader or any of those firms, make sure you guys keep me updated in the comments below. And if you guys want a free PDF guide on this specific model, it will be in the description down below. Now, let me show you guys one more example before we end this video, because I don't want to make this video super long. It's a fairly simple model, and you guys can go and backtest it on your own. But this model is super, super simple. And on Monday of this week, at the time I'm recording this, this model actually caught the low of day on Monday at 3 a.m. during the London kill zone. So if you see here, we have an SMT divergence here with ES, and NQ obviously made the higher low. Now you guessed it, if you mark out the rejection block here and you bring out the 0.5, you can see it perfectly tapped the 0.5 with the SMT divergence. So this should be a protected low. And this ended up just ripping, and this was the low of day. So the sponsorship in London came from a rejection block and an SMT divergence. You also had YM make a lower low here. So you actually got that double SMT. So you had ES and YM make lower lows, and NQ did not, and it tapped the 0.5 here. So if I start zooming in here, if I go to the 15-minute chart, you'll see that you had also engineered lows or relative equal lows, or obviously equal lows here because these lows were equal. But even before that, you had relative equal lows here at 2:15, and then you have 3 p.m. or 3 a.m. making a equal low here with this low there. So this is called engineering lows. And then 3:15 taps it once, taps it twice, and then we end up just shooting all the way up going into New York session. And that was the low of day right there. So this is a pretty cracked model. This works on all time frames. What I found to be best though is the 1 hour, 4 hour, 15-minute, and 5-minute are the best ones to use this model. You don't need to use time frame alignment. You can just enter on the 0.5 of the rejection block, because every single time you enter on the 0.5 of a rejection block and you have SMT divergence at the same time, you're getting the lowest risk possible, unless it's a very, very ginormous wick like on the 4 hour. Obviously, you might have to zoom into like the 1 minute. Like for example, if we go over to today's price action, if we go to the 4 hour, you'll see that we had SMT divergence up here with ES and NQ, and this actually tapped the 0.5, but it went a little bit higher. Now, here's another thing that you can do with this model is that you can add the quadrants similar to like a fair value gap. So you can add the 0.25 and the 0.75, and you can see that this kind of went up and tapped the 0.75. So if you would have, if you would have entered just on the 0.5, I mean, that would have worked as well on this 4 hour rejection block, but it did go up a little bit higher. So from the 0.5 to the 0.75, this is about 30 points, right? So if you would have had a limit there, I mean, you would have had to endure 33 points of drawdown, because if your stop was up here at the SMT high, I mean, that's about 65 points. So that is a pretty big stop, but you'd have to do it with like lower size. But yeah, you can see how well this model works. Another thing to note with this model is looking for those engineered highs and lows right above or below the 0.5 of the rejection block. For example, you had these highs right here, and this was the previous day high right there. So this was the previous day high right there. This high right here and this high right there, these two, you can go as far as to say these are relative equal highs, because they are relative to each other, and price came up to it. This is previous day high. This is the lower high that formed near the previous day high. So you could say these are previous. You could say that these are relative. They're not. They're kind of far off from each other. But the main point that I want to make is that if you're looking at a rejection block and you have those engineered highs or lows near the 0.5, you're most likely going to sweep those into that rejection block. And if you notice that the stronger asset or the weaker asset, if you're looking for a bullish SMT, if you notice that one of the assets is about to sweep that swing high, like in this case, ES came up, it was a lot stronger than NQ, and we were coming into this 4-hour rejection block, and we have, you know, engineered highs right below that 0.5. You can set limits here, or you can just set limits at the 0.5, because you can expect those highs or lows that are near the 0.5 that are engineered, either relative equal highs, relative equal lows, equal highs, etc. You can expect those lows or highs to get swept into the 0.5 of that rejection block, and that's where you would set your limit. You would set your stop at the SMT high or low, because in theory, if the SMT is correct, it should be protected. It should be a protected low or protected high. So that's going to be it for this video here. It's a fairly very simple model to follow. You don't need time frame alignment. You don't need, you know, all these other things. You don't need a fair value gap. You don't need anything like that. You just need an SMT divergence and a valid rejection block, and you set your limit at the 0.5, or you can even use the lower quadrants, the 0.25, the 0.75. But it's a fairly very simple model, and it is a great model for those prop firms that use those intraday trailing stops. And if you guys are interested in a one-on-one mentorship, I am opening up some spots this weekend. So if you guys do want to join, you guys can click on that first link in the description down below. Or if you guys want to come watch me trade live, free for 5 days as well, before even joining the mentorship, you guys can as well. It will be the second link in the description down below. But yeah, that's going to be it for me, guys. If you guys enjoyed the video, if you guys plan on using this model, let me know in the comments down below. Please leave a like, sub, comment. Let me know what you guys want to see next and all that good stuff. So appreciate you guys pulling up. Catch you guys in the next video.